Tesla put out their 10K, which is their annual filing about with all their financials. It's like 300 pages long, talking about what's going on with the company. An amazing read. I'll put a link in the description if you haven't read it already, but just so fascinating. So many tidbits in there that I haven't even discovered yet. But one of them is extremely important and has a lot to do with this capital raise. So this is actually something I haven't seen reported anywhere yet. Probably will be after this video. But Tesla has significantly upped their Capex guidance. And so that is a big reason that I think they could have decided to do this capital raise. So if you go to every single quarterly filing, Tesla basically is just an SEC rule, has to disclose how much capital expenditures they're expected to spend on an annual basis for the foreseeable future, like the next couple years. Capital expenditures are investments for future growth. If you're a rapidly growing manufacturing company, the SEC wants you to disclose that so investors can get a sense of, okay, well, how much money you're going to need to spend on all these factories you're building, on all this new tech you're developing. So Tesla discloses that every quarter. If we go into page 49 of the most recent 10Q, you can see that they guide here. We currently estimate that capital expenditures will be between 2 to 2.5 billion annually for the next 2 fiscal years. So Tesla's basically saying our annual guidance for Capex is 2 to 2.5 billion per year for the next couple years, for 2020 and 2021. We'll now go to the 10K. And if we go to page 41, you'll see they have totally changed this guidance. We currently expect our average annual expenditures in 2020 and the 2 succeeding fiscal years to be 2.5 to 3.5 billion. So Tesla has upped their Capex guidance from 2 to 2.5 billion to 2.5 to 3 billion. At the midpoint, that's 2.25 billion a year to 3 billion a year. That's an average of like 600 something million a quarter to 750 million a quarter. So basically spending, almost an extra billion per year on future growth investments. So a pretty significant upgrade in the amount of Capex they're planning to spend. And so if you start thinking, reverse engineering that of, okay, Tesla wants to invest in growth, they want to keep a cash cushion for a recession. It makes sense, that 2 billion, 1 billion increase each year is 2 billion. They just raised 2 billion. So they basically just offset that growth in Capex with this capital raise. So going into HyperCharts world, you can follow along hypercharts.co/Tesla. I just wanted to hone in a little bit more on what Tesla's Capex trend has been so we can see a little bit more about what they're thinking. So this is Tesla's cash flow chart on a quarterly basis. We have operating cash flow, capital expenditures, and free cash flow. Let's just start by saying, actually, this is worth highlighting because I think in Q1, Tesla's poised to lose a bunch of cash. So even though Tesla's cash balance has been going up, as we can see right here, they had about 6.3 billion in cash, up from 5.3 billion, all-time highs for record cash balance. What has happened every single Q1? Cash has gone down after Q1 in a lot of occasions because, as you can see, they produce a negative operating cash flow. And so Tesla, Q1 is a seasonally weak quarter for the automotive business. Not a lot of people are buying cars. Tesla's typically building more inventory and they're selling in Q1 to sort of build up inventory for the year. Additionally, less sales, but all of their fixed costs. This means that Tesla loses a lot of money in Q1 of the year and then starts making it back throughout the year. As you can see, that's been the historical trend. If we look at their operating cash flow, Q1, always a pretty weak quarter, lost about 400 million in Q1 2018, 640 million in Q1 2019, and that's just operating cash flow. That's not even taking into capital expenditures. So I think Q1 of 2020 is going to be another quarter of a loss of operating cash flow, so it's important that they have a cushion there. Just wanted to mention that. But now let's get into the more important part, capital expenditures. How much is Tesla spending on every quarter for new growth? So as we can see, Tesla's significantly scaled down their Capex since 2017 here, when they're spending, $1 billion a quarter almost, over $1 billion a quarter for a couple quarters to ramp the Model 3 and get that off the ground. And this was when they were having a bunch of issues ramping the Model 3. They had to build the GA4 in the tent. They were missing all their deadlines. So they were sort of overspending and sort of panic mode. Since then, Tesla's got a lot better at manufacturing and has, been guiding in their quarterly letters. Capex per unit of capacity is going down by 50%, by 65%. On these new production lines, Model Y at Fremont, Gigafactory 3 Shanghai. So Tesla's getting much more capital efficient at building out their production lines. So that's one thing that we're seeing here play out on the Capex thing is they just need less Capex to build out the same production lines because they're getting more efficient. But they're still going to have to ramp this Capex significantly. And if you think about the guidance here, 412 million seems like, okay, they're kind of growing Capex. This is nowhere near what Tesla's guiding. 3 billion, the midpoint of their Capex guidance divided by 4, 750 million a quarter. So this number is going to have to go all the way back down, here on average, 750 million per quarter for the next 4 quarters. So Tesla, they're basically guiding for a significant increase in capital expenditures.